Is it better to be right or to be rich? For one of Wall Street's most controversial tech darlings, that question is about to get a very public answer. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today we're digging deep into the data and AI giant Palantir Technologies, ticker PLTR. This is all based on our research captured this morning, November 3rd, 2025. Our mission today, pretty simple. Try to make sense of the massive disconnect between the market hype and the cold, hard valuation numbers.
Yeah, and the backdrop is really key here. You've got the tech sector showing some strength, definitely, but there's this persistent background chatter about the R-word recession and quite a public push for the Fed to maybe start cutting rates. So it's a really volatile mix. And Palantir stepping into earnings today, it just feels primed for, fireworks.
Okay, so the macro setup sounds pretty explosive. But what about Palantir specifically? What's driving their volatility right now?
Okay, let's unpack this a bit. They're heading into earnings with just sky-high expectations. It feels like it's fueled by all the AI demand, right? Especially for enterprise stuff, like their AIP platform. And you always hear those whispers, don't you? Potential stock split, maybe, to get that share price looking a bit less daunting.
Right, but that hype leads you straight into the core conflict, the big problem here. The stock closed over $200 a share. Now, contrast that. You run the numbers, the traditional valuation methods. Based on free cash flow, our research points to something like $16.66. And if you look purely at earnings per share, it's even lower, like $6.55. Just think about that for a second. That's not just a gap. It's a Grand Canyon-sized chasm between where it's trading and what the fundamentals might suggest.
Well, wait a minute. $16.66. $6.55. With the stock over $200. Isn't that just pure speculation then? How can we even land on cautiously bullish if the fundamental ground looks that shaky? That's exactly the puzzle, isn't it? And it really explains why the experts, the analysts, are so squarely on the fence. You look at the Wall Street consensus from our research. 25 analysts covering it, 17 of them rate it a hold, just flat out hold. They're basically hedging. Because Palantir, it's not being priced like a normal software company. It's being priced as this unique, mission-critical AI thing,
right,
anchored by those huge, stable government deals. The market's essentially giving them this maximum software multiple, maybe even more, based on the promise of growth, their defense niche. It's letting investors kind of ignore those low EPS and free cash flow numbers, at least for now.
Okay, so fundamentals are screaming caution, maybe even danger. But the market often ignores that, right?
Yeah, okay.
So you got to look at momentum. What's the crowd doing?
Oh, the crowd is definitely betting big. Very confident. The options market is showing a really bullish skew. The put-call ratio, bearish to bullish bets, it's only 0.44. That's pretty aggressive positioning. And another thing, there's huge open interest way out at the $95 call strike. Now, obviously, that's miles away from $200. But what it signifies is long-term conviction. Big players betting on sustained upward movement, not just a quick pop.
And the bears, the short sellers who'd bet against it.
Almost nowhere to be seen. Short interest is tiny, just 2.25% of the float. That tells you there's very little professional conviction, like real money betting that this thing's about to fall off a cliff.
Okay, what about the charts, the technicals?
Yeah, the technical signals really back this up. The chart, powerfully bullish. Unambiguously so. You see it making higher highs, higher lows consistently. And critically, you look at the money flow indicators, this isn't just noise. There's real institutional conviction driving the move. It's not just retail chasing. And the rate of climb, the momentum itself, it's actually accelerating, picking up steam, not fading. Volatility confirms it too. The stock's breaking out. It's in a very active, dynamic phase right now.
Right, so this is where it gets really interesting, isn't it? You've got this classic Wall Street showdown, momentum, this technical tidal wave, versus the valuation chasm, the fundamental numbers. So our analysis, after weighing all this, it comes down to cautiously bullish verdict.
Yeah, cautiously bullish. And we lean that way only because the technical picture, the momentum is just so overwhelming right now. It's acting like this immediate, powerful force field, basically letting investors completely ignore that valuation risk for the moment. But the instant that momentum cracks, that valuation suddenly becomes very, very relevant again.
Okay, so that leads us straight to the risks. What could derail this besides, the whole market suddenly tanking?
Well, the big one is obvious. A disastrous earnings report, something that just shatters that high growth story. If they miss expectations, or worse, lower their guidance, especially on the AI commercial side, the floor could drop out fast.
So what levels should people be watching? Key price points for today and maybe the next few sessions?
Okay, keep an eye on these. Upside. The recent high is the first hurdle, $204.18. It needs to break and hold above that. Then there's the big psychological number, $200. Failing to stay above that would be an immediate red flag for weakness. But the ultimate line in the sand, if this whole momentum trade starts to fall apart, it's probably that Friday after hours low, $188.29. That specific level, it represents the last real institutional support point before this latest surge really kicked off. Breaking below that, it likely signals a major shift in control. Look, Palantir is praised for absolute perfection, but its chart looks perfect right now, too. Today's earnings are going to show us whether that perfection is real or if it's just, a very convincing illusion the bulls have bought into.
That wraps up this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.